when all those people were buying, it should have told us that we should be out for a while. And so when you see now that all these people are selling, but strictly because they waited 13 years and now it's back where it was, their thesis is now playing out. So it tells me that you can probably go up a little bit more. And just to be clear, like the gold price is not something to like make money on. I mean, what it's doing this year is it's preserving your money, your wealth. And the gold stocks have so far negative attachment to the gold price. I mean, the gold price and the copper price is at all-time highs, and companies, some of which I've been involved with before who didn't want to take any of my advice, are going backwards. And you're like, what's the deal with that? Come on, like you got to wake up.
Gold slid over 1% on Thursday, reaching its lowest level in 2 weeks. Investors squared positions in anticipation of U.S. economic data that could provide additional insights into the timing of potential interest rate cuts by the Federal Reserve. EBTucker, a renowned investor, writer, and analyst specializing in the gold and silver markets, suggests a bullish outlook for gold, predicting it will reach $3,000. Tucker argues that the recent selling behavior indicates a misunderstanding of gold's actual function and a lack of proper education regarding its role. The gold market is trading near session lows following disappointing economic data, which showed that sales of durable goods fell short of expectations in June. According to FX Empire data, if the market breaks below the uptrend line, it could drop to the $2,300 level, where there is significant support. However, a bounce is more likely at this stage. Tucker emphasizes that gold's primary function is not to generate profits but to preserve wealth. Despite record-high prices for gold and copper, many gold mining companies are underperforming. An analysis by S&P Global Market Intelligence reveals that the average share price of 11 of the largest gold producers, each mining over 500,000 ounces in 2023, has underperformed relative to the rising gold price since the start of 2022. Please tune in to explore EBTucker's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
What I hear is that the phone rings 5 times, it's 4 sellers, 1 buyer.
Where's the buyer? Why?
So what I think they're doing is, okay, this is going to encapsulate my whole opinion about this thing. The people that are selling are the people that bought because Mr. T was on television in 2010 saying like the gold price is going to go higher because the government's going to fail and all that stuff. They bought and then they sat for 13 years and the gold price is all of a sudden back and they're like, I'm out. And what does that tell you? That tells you that it's probably going to 3,000 because you're like, when you see that in anything in life, it shows you that all they're thinking about is their price. Does that make sense?
But it also tells me they weren't educated properly on the function and role of gold. That's what it tells me, is that these people were miseducated.
Good luck with that, right?
I know.
People buy, okay, so how do you buy a car? On emotion, and then you justify later with rational thought.
Right.
So that's never going to change. It's always going to be that way. But when you see in a market, like when all those people were buying, it should have told us that we should be out for a while. And so when you see now that all these people are selling, but strictly because they waited 13 years and now it's back where it was, their thesis is now playing out. So it tells me that you can probably go up a little bit more. And just to be clear, like the gold price is not something to like make money on. I mean, what it's doing this year is it's preserving your money, your wealth. And the gold stocks have so far negative attachment to the gold price. I mean, the gold price and the copper price is at all-time highs, and companies, some of which I've been involved with before who didn't want to take any of my advice, are going backwards. And you're like, what's the deal with that? Come on, like you got to wake up. You got to wake up. I mean, all the things that you said were going to happen are happening and you're going the wrong direction. And so that's fixable, by the way. That's not like something that you can't change. You can change that. But the company that changes that first, I think, is going to be the leader, right? And it hasn't happened yet, and it probably will happen at some point.
The most recent surge in the U.S. national debt has been particularly startling, with the latest figures from the Treasury Department showing it reaching $34.94 trillion. This escalation has led to rising interest payments, exacerbated by the Federal Reserve's substantial interest rate hikes since March 2022. As a result, interest costs are mounting significantly. For the current fiscal year, the Treasury Department expects interest payments on Treasury debt securities to total $1.14 trillion. This alarming increase highlights the nation's growing financial burden. EBTucker points out that the U.S. national debt has doubled roughly every 8 years since 1970. Tucker recalls writing about this trend in 2016 when the debt was around $16 to $17 trillion, and now it has surged to nearly $35 trillion. If this pattern continues, he projects it could reach $75 trillion by 2032. Rising national debt has long been a pressing issue in America, attracting attention from prominent figures such as Tesla CEO Elon Musk. America is going bankrupt, by the way, Musk wrote in a recent post on the social media platform X, responding to a post by Billy Marcus, the creator of Dogecoin. Let's get back to the interview.
Yeah, I mean, when you look back on it, all that pandemic stuff that we did, we shot $2.5 trillion into the system, and then prices went way up, and then they kind of like stopped going up, and they're just high now. So if you have real estate, your insurance costs are up. And the insurance company says, look, I mean, the cost to rebuild the place is like not gone down. I mean, so it's at every level. This never goes away. You know, it's like the toothpaste coming out of the tube. You know, it never goes back. It might stop coming out, but it never goes back in. And so I think that's what's going on. But, you know, in my newsletter,
Yes.
Tucker letter, we've talked about this because we found some really fun ways to play this. I mean, one of them is you probably are having trouble buying a new car. You know, like, I mean, most people are going in to get the car and you run into some problems. Maybe you bought the car in 2021 or something, you're going to trade it. I like to keep a fresh car around, and you paid too much for it, right? Because you paid the market adjustment and all this stuff. They're like, well, you know, it's like not worth that much. And okay, so fine, I'll deal with that. Well, let me get a loan for the new one. Well, it's 12%. What? I mean, so you start adding those up, you can't get a car. Now, here's the point. It's not just like, we don't complain. We have a policy, you know, no whining, no complaining, no moaning. Yeah. So what we think is interesting is that what's happening is you just can't get that new car as soon as you thought, you know, because for a number of reasons. So you're going to keep the family wheels a little longer, which means you're going to fix the car.
Right.
And so that's the way we've played it, is we've played the people are going to keep something longer than they thought, which means going to need some parts and things that you weren't getting before. And it's unbelievably strong in that business because you pass through the cost of a battery. You know, nobody fights that, right? I mean, your battery's out. It's like 300, it was 250. I mean, like, what are you going to do? Nobody's going to help you. Like, that's the dirty little secret, is that the only time when somebody starts saying they're going to help you, be careful, because they're just trying to distract you from something. I mean, nobody's going to help you. You got to help yourself. That's what nobody tells you growing up, is it's like, you know, you got to wake up. I mean, you've got to wake up. And I mean, the presidential debate, I think about it. Do you notice that we had basically no primaries this year, right? We had like no, so this is like, you barely even know there's an election except for whatever the main pipe of news coming in is, which is now about, like, you know, geriatric memory issues or whatever. So like, you know, what's it going to be next month? It's whatever they need it to be. But everybody is like, it's strange, the mindset, because we used to be like involved in this thing where we got behind the candidate, and then you see this whole like electoral college had a real purpose, because, you know, certain states had to come over and we picked the best candidate and we go, but it's not like that anymore. And so the thing about the debt, though, okay, here's what's really important, is the debt doubles every 8 years. And that's been the case since 1970. So you have to go back to 1970 and look. And I'm telling you, in 2016, when the candidates were battling it out, I mean, I went to all the rallies in 16. I'm not registered to vote, but I go to sometimes the rallies in the old days so that I could write to my newsletter readers about what was happening at the rally. Like, it's very interesting who goes to rallies, you know. So when you talk to those people, you can, like, they'll tell you all kinds of stuff, you know. They're very passionate. They're very ideological. There's lots of dogma going on, and they'll tell you fun stories, like, where'd you come from? What do you do for work? You know, why do you like the candidate? They'll tell you all this stuff, and it's fun to retell that story and kind of like comment on what they're telling you. But one of the things I wrote in 2016, I wrote this every 8 years it doubles, and it was 16.5 trillion at the time, or like 17, and now it's what, like 38.
Yes.
So yeah, and you go back to Reagan, and it was like, you know, it went from like, you know, 800 billion to, you know, 2 trillion. It's like, it doesn't matter what 8-year period you look at, it's like the debt doubles. And so what's it going to be in 2032? You know, it's going to be 75 trillion.
Considering the inability of gold to break above the $2,400 an ounce mark overnight, and the solid momentum of gold bears driven by the significant growth in the U.S. economy in the second quarter, what are your thoughts on how this will shape investor sentiment toward gold shortly? Do you believe that the bearish trend will continue, Or is there a possibility for a bullish reversal? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.